Hello and welcome to a new edition of Market Masters. The UBS India 3-day conference is underway. First up on the show today, my colleague Nimesh had the opportunity to speak with a very rare voice. UBS country head Mickey Doshi. Nimesh quizzed him on a whole host of issues. India's recent underperformance, the potential of a fair trade deal between India and the United States, and the exponential growth in India's primary market space. Take a listen.
This is a big event for us at UBS. This is our second year of the conference after we integrated with Credit Suisse. The turnout's been superb, like you rightly said. The FI turnout and in domestics have been around. I think the mood is clearly one of wanting to see the opportunity and see what the investment outlook looks going forward. Yes, you're right. It has been a rank underperformer. China and Korea, as you know, have been clearly beneficiaries of less flows into India or outflows out of India into those markets. Multiple reasons. I think some of the flows have gone into the IPOs. We've had a robust IPO calendar this year, continue to have one next year. So that's part of the reason why. Secondly, I think Liberation Day obviously wasn't very favorable for us, which I think, again, we're hoping that changes going into 2026 and is positive for us. So yeah, the mood is upbeat. We actually had the ex-deputy governor of the RBI yesterday. Again, very supportive. He thinks RBI is going to be out there and supporting the growth in this country. So I think,
Sure. I'll ask you about banking and RBI, stance as well. But you spoke about, Liberation Day, and since then we've actually underperformed.
Yes.
You're having Piyush Goyal at your conference today, though it's virtual. But as a house, what are you expecting in terms of the India-US deal? By when you think it will see the light?
When will see the light, I don't know. The hope
but
is...
But you're hopeful?
Very, extreme. I think it's in the interest of both countries, actually. We're no longer a country which anybody can neglect, right? I mean, and if you've seen what our Commerce Minister has done in the last, 18 months, from Switzerland, Luxembourg, to Norway, to UK, to New Zealand, one by one, we're getting our agreements in place with various countries, right? And I think the US is going to be right up there. So am I hopeful? The answer is 100% I'm hopeful.
So what's the base case at UBS? That the 25% extra will go and the base 25 will remain, or even that will be reduced further to sub 20?
We have not actually done, I personally have not taken a view on that. I think at least as first case, the base case should at least be that the top 25% should go.
Okay. Coming to banking, Mickey, you spoke about a deputy governor at your conference. The biggest FDI in the last 1 year has come into the financial space. Never ever we thought of in the last 15-20 years that Etihad Bank will get an access of 60% stake in RBL Bank. It's unheard of, right? What's your sense? You've been a banker for so many years. Right time to open up the banking sector, and you think more deals will come?
First thing is, I think clearly the financial sector is a proxy to our large population, right? 1.4 billion people, 1.5 billion people. The consumer play in India, if you play it via financials, there's a great way to play it. India has had some world-class banks. Yes, you're right. Historically, the RBI was quite stringent on allowing foreigners to come in. If they came in, licenses were given, with a certain business plan. Growth was controlled by them. And I think there was no harm in the way we approached it. I think we've had some ICICIs of the world, HDFCs, Kotaks would not have happened that easily if we just allowed them to come in the manner if they may have wanted to. I think going forward, yes, it's a mature market. I think there's need for a synergy between what the global banks can bring to India in terms of products, in terms of the reach, etc. So yeah, I think the time is right, and I can see more of this happening. Okay. I think the dialogue which we actually as a house have with a number of jurisdictions where people are keen. If you ask the Japanese, are keen to expand here. They ask the Koreans, they're looking for opportunities. So yes, there is keenness.
Okay. You briefly spoke about IPO as well as one of the reasons why some bit of FI money has moved from secondary market to the primary market. You've seen so many IPO cycles in the last 20, 25, 30 years. What do you make of the quality of paper that's hitting the market? While there is an argument of valuations very steep for some of those recent listings like Linkart, but what's generally your sense of the IPO paper in India?
So you're absolutely right. There have been multiple cycles and cycles which have not worked out for many corporates or for investors, right? And go back to the Y2K 2000 boom era, where there were a lot of small companies coming to the market. The one thing if you notice now, the size of the IPOs, right, are clearly differentiated from the past.
Yes.
And I've always maintained that it's easier to get a large IPO done than a small IPO done, right? The size of assets which the domestic mutual funds and of course we've always had the global investors coming in, it's huge. So to make a difference in the portfolio, these large IPOs. So I think what we've seen is most of the IPOs clearly at the right valuation have done well, and I continue seeing that. I think we've seen the other advantages. It's no longer just a single economy, or it's across sectors. You're seeing the IPOs coming out. I mean, I was just looking at this morning's papers, from defense to education to consumer. You can buy glasses, etc. So I think it's a very varied sector. India is no longer just a 2-3 sector market, sure. And I think it's going to continue. Mm-hmm. I think you see that in our pipeline too. Sure.
I want to ask more about the UBS strategy in India, because, and I'm asking you because recently we saw the deal of UBS buying 5% in 360 ONE, and you want to eventually build this wealth business. Yes. As a financial, as a theme, how much bullish you are across the capital market theme, whether it's wealth management or exchanges or brokerages?
Like I said earlier, right? Financial services is clearly perfect for playing the consumer market, yeah. Right? I think and could be across the whole chain of retail to ultra high net worth, in terms of wealth management, in terms of investment banking, in terms of broking, pure corporate banking, right? We've seen how banks have grown on that side. Extremely bullish. I think yes. The reason we did this deal, or the hallmark of this deal, is you're combining the largest wealth manager in the world, the premier wealth manager in the world, with the largest standalone domestic wealth manager, asset manager in India, right? I think it's a win-win for both, providing access to our global clients to come into India with 360 ONE, and as you're seeing the markets open up for domestics to go overseas and various.
So the plan is to stick with 5% in 360 ONE, or you want to increase further going forward?
I think it's early days. We've just got the marriage was consummated in April. The other agreements have just been signed. I think we'd like to see how it plays out, but clearly, I think it's in the interest of both that it grows. I think even when we did the announcement in April, we did say that this is the start of the relationship. So I'm hopeful that it does grow.
Okay. Vicky, globally the one big talking point has been the AI, and India has been seen as an anti-AI in that sense. We don't have much of an AI play in India. It can cut both ways, right? If there is a bubble which bursts in AI, India will be safe. But what's your general sense on the entire AI theme, and how can India be a part of it going forward?
So from obviously I'm learning a lot about AI. Actually, one beautiful thing about UBS, they had the senior management start a course. We were sent away on a course for 2.5 days to the UK, to Oxford, to actually study the impact of AI. So we all, as a house, we really believe that AI is here to stay. There's no doubt about that. It's going to change how work gets done. Of course, having said that, I don't think it's sole reliance on AI. India, has it missed the boat on AI? No, I don't think so. I think even when you look at technology, how from the old technology where in the 90s we may not have been in the cutting edge to start off with, and you've seen what we did there. I think this is the first wave. I think it doesn't necessarily end with the first wave, and knowing how smart our engineers themselves are, I don't see any reason why we won't participate in this growth. And we'll get a sense also, like you said.
You're not worried about India not yet participating in the AI?
Not at all.
Okay.
Not at all.
Okay. You've seen so many investment deals in the last 20-30 years. We've seen a lot of M&A deals picking up in India as well, and India now actually doing a lot of outbound deals again, right? Mid-cap companies buying out big assets over $1 billion and all. What's the sense there? Is there a lot of easy liquidity which is helping a lot of M&As to happen, outbound M&As as well? So
I think two things, right? First, M&A domestically, I would focus on the fact that there's also a generational change happening, right? I've been back in India 30 years, right? That's already one generation. Companies which were set up in the 80s, 90s, they may have a generational change. The second gen may not want to be part of the company. You're seeing a lot of inbound interest. I mean, immense interest. In the last 2 days, the number of clients we've met, private equity firms you met, they're all looking at opportunities in the inbound M&A space, right? So that's here to stay. In terms of the outbound M&A, I think we've had a cycle in the past. We've seen some of the larger players going out. Again, I think it's a matter of how confident the Indian corporate has become, and they do believe that if they can actually benefit from the acquisition, potentially one of the themes which is quite popular is go acquire the front end offshore, bring the back end back in India, and it's a win-win situation. And I think it's a matter of confidence that you're seeing these transactions happen. Sure. Corporate India is no longer worried about going overseas.
Welcome back. We spoke with Gautam Chhaochharia, head of global markets at UBS, and began by asking him about the scale of the conference and the key themes he's looking forward to. Listen in to a slice of that conversation.
It's a bigger event this year than last year and earlier. We have more than 250 plus investors and
Welcome back. We spoke with Gautam Chhaochharia, head of global markets at UBS, and began by asking him about the scale of the conference and the key themes he's looking forward to. Listen in to a slice of that conversation.
it's a bigger event this year than last year and earlier. We have more than 250 plus investors and 65 or 70 odd corporates. But again, beyond that, we have interesting panels, including from government officials, ex-RBI officials, panels on consumption, on AI, on manufacturing, defense. So host of thematic panels which we have curated for our investor base to hopefully get something out from this conference. And beyond that, we have multiple tours going on, like we did a couple of days of macro tour in Delhi and Bombay last couple of days, and we have thematic tours on the ground consumption, manufacturing, defense, etc. Again, the big themes, obviously, from talking to investors, this is still early discussions, is around what happens to growth in India second half and later, and also the trade deal, and the big longer term thematic around manufacturing as to whether we see more manufacturing specifically around defense, but in a broad way pick up in India.
In terms of the foreign participation, Gautam, hi. So, what is your expectation in terms of just where investors are coming from? Because a lot of them have given India the skip, right, in this year, in this calendar year. They've gone to other Asian markets, and the biggest grouse is that India doesn't have a deep tech story. So, what's your sense? Do you see that tide turning, even in your conversations in the run-up to the conference?
So look, a few things. One, we are seeing increased foreign investor participation this year. So we have more number of investors traveling, and this is across the world, not just US, but across countries in Europe and even Asia. Beyond Hong Kong, Singapore, we have investors attending the conference. Okay, so that's the first point. Second is, look, foreign investors have not been investing in India in aggregate for last 5 years, not just last few months. Beyond the yearly buying and selling, net they haven't invested literally anything over the last 5 years. The last few months, obviously, there's an AI and tech thing, there's the India-US trade deal, valuations, and opportunities in other markets in Asia. So that's not helped also. But what we have seen in the last couple of months, and more so in the run of the conference also, is we are seeing interest pick up in bottom-up stock ideas. So we're still not seeing foreign investors talking, okay, let's allocate a lot more money to India, it's bottoming out, etc. But we are seeing in the last 2 months bottom-up discussion, and it's across sectors, not just one sector. Whether it's financials, consumption obviously, but even manufacturing, defense, etc. We're seeing a lot more discussion from the team here, sales and research, with foreign investors on bottom-up ideas.
All right. Hi, Gautam. Good to see you, Ben. And you were quite positive on consumption, namely the two-wheeler and the four-wheelers. And actually, the last couple of months have worked out very well for them. What is your view right now? And from the auto pack itself, consumption/auto, what do you like?
So look, broader consumption theme we continue to like. There are enough tailwinds in this sector. Rural, urban, credit, obviously the government policies around GST and upcoming pay commission and some of the freebies. But again, it has to be more stock and sub-segment specific, not just sector specific, but sub-segments. Like in autos, the theme which we have been pushing is more premiumization. And within two-wheeler, scooter and EVs rather than a broad two-wheeler or broad four-wheelers. So it's also stock specific. It's not a very broad-based view. Again, in the last couple of months, everything has benefited. But for the discerning investor going forward, these themes will matter more because that's where we see higher visibility and higher comfort of growth actually playing through. So we are much more comfortable about the premiumization theme than aggregate, say, car sales volumes, which at the margin, in fact, two-wheeler and cars both, the expectations might be running a bit ahead versus what our analyst thinks. We are much more cautious on the industry level volume outlook being priced in the market, but at a stock and sub-segment level, there are opportunities. The broader consumption beyond autos still looks attractive, whether it's retail, whether it's food delivery, QSR, selective FMCG also. So broader consumption, we remain constructive.
Okay, so constructive on some of the broader consumption themes. You mentioned manufacturing, and there will be obviously more conversations around that theme at the conference as well. Right now, what's the house view? And when it comes to the whole capex side of the market, what is the position? Because a lot of these stocks, obviously, through the course of the last several months, they've come off their very high, very lofty levels.
So again, similar to consumption, there is pockets which we are very, very high conviction on, pockets in defense, but also in the capex cycle part, specifically around energy, around renewables. They remain attractive, both near term as well as from a longer term cycle, including what they're pricing in. So that remains an attractive space in general for us. And again, in the last quarter or two, we are seeing some pickup or at least stabilization in private capex. It's no longer a drag or not growing enough. Will it be a proper full-fledged private corporate capex cycle? I think it's too early and premature. And one of the things which we have been telling and we'll highlight again, it's that one of the things we have to remember, don't compare it with what we saw in say 2004 to 7. That kind of private corporate capex cycle, if you are defining in that parameter, that's going to be difficult. But from where we are now, uptick in the next couple of years is fairly likely.
I know index targets are what they are, Gautam, but 2026, what's the Nifty target for you?
So we don't have an official target for Nifty for next year, but we do see a small upside from here for sure. Look, at a broader market level, there is the flows from retail investors, mutual fund, which will help stabilize markets. On the other hand, there's also a big pipeline of capital raising, which also sucks away some of the liquidity. So on a technical side, it seems to be a more range-bound outlook, but on the fundamental side, that's the key part. So we are expecting growth to pick up as the policy easing flows to the economy. The only joker in the pack is some level of sentiment and uncertainty, specifically around US trade deal. I think that's also a question of time. We will have clarity around that, and then hopefully we'll see a growth pickup. And that will be the key for markets to break out of the band we have seen in the last couple of years.
Yes, it's a very interesting time. So particularly
Welcome back. Well, keeping it with the UBS conference, we also spoke with Sunil Tirumalai, Global Emerging Market Strategist at UBS India, on his global and Indian market outlook. Listen in.
Yes, it's a very interesting time. So particularly for the India context, after a year of deep underperformance, the things which are changing are corporates, giving you any positive signals. That's something that we are really keen to understand over the next couple of days. I think coming to your question on our positioning and in our underweight position on India, there are a few reasons behind it. Right. If we actually look at the last 3-4 years of actual fundamental performance that we see, delivered by companies in India, the listed companies, the large companies in the index, you actually don't see any extraordinary growth or either on top line or on earnings. It's pretty much in line, if not a tad lighter than the rest of emerging markets. The markets which are actually doing far superior are the tech markets like Taiwan, Korea, China too. And I think it also starts with the fact that the nominal GDP growth has actually come off significantly. And that matters a lot more for stocks, for top lines, for earnings, etc. Till let's say pre-COVID or even till 2 or 3 years ago, India's nominal GDP growth was head and shoulders above other emerging market peers. But now it's not. There are other markets which are very within touching distance, right? So while that could stabilize and there could be some improvement, we don't see a catalyst that can take it back up to 12-13%, kind of, nominal GDP growth. In the absence of that, the valuations are actually, reasonably rich. So, in our numbers, historically, India used to trade at a 35-40% premium to other emerging markets. It's now, even after a year of underperformance, it's still at a 60% plus premium, right? Now, in the context of all this, I mean, the report that you're referring to that came out this morning, actually, we've done a lot of work on the AI theme itself. It's a global effort, trying to understand where we are in the cycle, how much, more to go at a global level, and which countries, which stocks are more exposed, etc. India is conspicuously absent, on that theme, and I think that's something that, from a global investor's perspective, other markets like China, like Taiwan, like the Korea, which are giving you better opportunities. Now, the specific question on, the secondary market versus the primary market, I think that's actually one of the reasons for the underperformance of the secondary market. So if you actually see, no doubt the flows of household money into the stock markets is continuing. SIP investments, the flows are fairly high. They're not going much higher anymore. I mean, they're kind of showing signs of plateau. But the other interesting change is that the capital raise activity by corporates has actually shot up significantly. I mean, when we did some numbers pre-COVID, the total on a run rate basis, about 10% of the money coming in through SIP and mutual fund flows and other direct flows into the market from households, about 10% of it was the scale of corporate demand for equity capital. Now that number is touching 25%, and combine that with the fact that foreigners are also, not excited. They are finding other, markets to invest, and hence money being taken out of India. That's what is preventing the secondary, market to do well. So you have a decent supply of paper. I mean, all these IPOs are good. They're really good headline, material. But it also means that's money being taken away from the market.
Sunil, you're building a very believable, compelling bear case, justifying that call. So therefore, let me ask you, and we are barely 3-4% at the index level, we're barely 3-4% away from the all-time highs. Given all the negatives that you described, the fact that MF flows have slowed down, there's no two ways about that, and FIIs have not returned, is there a possibility of some price correction in India? So far, it's largely been time correction. What do you see ahead for the broader market, for the index?
Okay. So let me take a step back. From a global perspective, we are reasonably positive on global equities, right? So, there's on S&P 500, there is a 10-11% upside till end of 2026. On our emerging markets target, it's a tad lower. So we are actually arguing for the US regaining leadership. The setup globally for equities is reasonably good. Global macro, on our economist numbers, US economy should start, revving back up and, accelerating in the back half of next year. China numbers, while they are slowing down, they have actually been upgraded from what it was a month ago for the next year. And in this context, where are valuations, and let's look at the rates market. There is an anticipation that potentially the Fed could start expanding their balance sheet. There will be stable coin demand in the US. I mean, all of that will keep yields in check. So it's a reasonably benign environment for global equities returns, right? So I think it will be really hard for more than a 5% correction, in the market. Of course, we need to be clear about a dollar correction versus a rupee correction. Our call is for the rupee to depreciate till end of next year. But keeping all of those things in mind, I think it's more likely that the time correction will continue rather than a very sharp, price correction, because the supply of money from households is still continuing. That's a fantastic buffer, for the market. It makes it, very defensive and very protected against a big correction.